up, guys? How's everybody doing? My name is Chris. This is Wheelhouse Trading, and welcome to the Wheelhouse. So, I tried to make a video. Actually, I did. I recorded, or let me restate that. I didn't record. I just talked to the camera for 50 minutes and then went to move it to my desktop so I could edit it and realized I never hit the start record. It was late at night when I did that, and I just could not make another video, nor could I even duplicate or replicate what it is that I did and said in that video. So I wasn't able to get one out for Friday, but you know, I got a little bit of time this morning on Saturday, and you know, I figured I would walk through a whole bunch of different things going on, some thoughts on all kinds of stuff, and you know, some things that I'm doing, you know, kind of navigate the situation. And I guess it's always prudent to you know, take a look at the indexes first. You know, I was pretty excited you know, when I started seeing some of the higher lows developing on the charts. But I had said, if we get rejected off of those 50s or those resistances and we come down, well then unfortunately we have another lower high. This is like a lower high, okay? So when you come down, like that's a lower high. I mean, I guess, you know, normally you would do it something like that, and you're going in this direction is the problem, okay? This is the Dow. All right, so you had this primary trend going up, and then you now have this new direction. You're in the fourth market phase, which we talk about. This is flattening out, which if it starts to come down, it's not good. But what's really not good, guys, is, you know, as you guys know, following this channel, I told you to get out on this candle. I called it, like, and I was very, very correct about that. I was adamant that we were going to come down, and it's, if you go through all my videos, you'll know why. It's because this is what I study. But we had the top, very damaging. You know, everybody starts talking about it over, you know, over in here. And then we rallied up, and I said, right here, guys, move cash, get out of margin. And then boom, comes back, same thing repeats. Now, I was explaining you come down through the primary trend, and we had rallied back up, okay? And we even came back into the primary trend, which is really, really good. And then I had said, look, we're at the moment of truth, guys. If we, you know, when we come down, we were on this candle. I said, if we go back up into here, we have a chance, just a chance, okay? But that's it's positive, you know, coming from where we were. But if we get rejected, okay, if we get rejected and we don't make it, well, that is really bad, and breaking the primary trend and then a rejection off the primary trend or the previous primary trend is a telltale sign that, you know, we're in for some freaking pain. It's not good. And like I said, I get my news from the charts, so we can, and we will talk about all kinds of things that are in the news because there's always catalysts. There was catalysts in '61 when the Kennedys went after the steel companies and the stock market. Meanwhile, we had the Russian missile crisis. You know, a few years later, we had Vietnam, a hawkish Fed monetary policy and inflation. Right after that, we had the Nixon Watergate scandal and OPEC and the oil embargo. You know, I mean, it's just on and on and on, you know, and, you know, the tightening of the Fed rates, crashes and recessions. I mean, it goes on and on. There's always a catalyst, but following the charts, the volume, meaning how many people are buying, and then if it's going up, then there's more people buying to go up, and if there's, you know, people selling, you know, a lot, then it's coming down, and it just shows up in the charts and the price action and the volume. It's very, very simple and very honest and very transparent. The charts are, you know, they never lie to you. There's a lot of things that happen in the media that are being withheld from the American public. I'm going to talk about some of that stuff right now, or in this video, and you know, a lot of it I can't like prove, you know, but I mean, it's like common sense. Look, if you can live your life having a lot of common sense, you can do really well, like in business and in stocks. And common sense is pretty important trait to have. So we're gonna go through some common sense things here today. But yeah, we got a new primary trend. We're making those lower highs. This is where it started. Boom. Okay. and we started making higher highs, but we didn't pass the previous all-time high for a trend reversal and a new primary trend, which would have looked something like this. Coming up, okay, and what you're looking to do is, this is the original one. We'll just kind of keep that one seated right there. What you're looking to do is have the previous high on the Dow, which would have been this peak right here. You're looking to come back into this primary trend and then, go back through until you break out of the primary and continue a bull run. Okay, that would be like the best case scenario for everybody that wants to go long and for the stock market to go up. All right, but unfortunately, even though we created higher lows here, which was very, very positive, we got rejected off the 200. So most likely it's going to do something like this. It's going to come down and retest the lows, and it's going to have another chance to break out, or it's going to continue to do this number. And, knowing all the things that I know about markets and economy, and, I can see kind of what most likely will happen. Just like I had said 2 quarters back on the day when like Apple, Amazon, Facebook, they all had their earnings, and I was like, ooh, when PayPal too, I was like, oh, that's the first warning shot. That is the first warning shot. When the big ones start to miss on earnings, fund managers, hedge funds, investors, they're going to know to start pulling their money out, because that's the first sign. Meanwhile, everybody knew there was going to be inflation because of the expanded M2 money supply. We'll talk more on that. But essentially, we got a lot of problems. We got a lot of problems, a lot of catalysts. It is showing up in the charts. As I had said before, the Dow is a barometer for the health of the economy. It just goes back to the Dow theory. I've already explained that in multiple videos, but there's a few things that Charles Dow had said that are very accurate and still hold to this day. And one is that you want to trade with the trend. Okay, just so you know, Charles Dow was the co-founder of the Wall Street Journal, and also co-creator of the Dow Jones Industrial. And anyways, trading with the trend, which is a big thing that I do. It was one of the things that Charles Dow said. Another is that whatever happens in the economy, or the top 30 influential companies within the Dow, back when he started, there was only 11 companies, but there's 30 now. It'll show up in the Dow, and the Dow is a leading indicator, which will lead us, first down into a correction, crash, and then recession, and it'll also lead us out. So as it's coming down, and it starts coming out, businesses are still coming down, unemployment's still going up, and the Dow is leading us out. That's how it works. Okay, so that's why I'm always so big on like paying attention to your indexes and stuff like that. Now, and the primary trends. So, we had this great run, and this is about right, time-wise. We had this great run, and now we're making the lower highs. We're in this new primary direction, okay? And we got rejected off the primary trend, which tends to be, when I look at charts going back 100, 120 years, there's always this similar pattern of the bubbling top, the lower highs, the break of the primary trend, and then when it's gonna be really bad, it rejects off the primary. And we just had that this week. Now, when you hear stuff on Bloomberg like Romaine Bostick saying things like, and don't quote me, I won't be able to say it exactly like he said it, but I'll give the gist. When you hear things coming out of their mouths, such as the most volatile week we've had in 2 years, the highest inflation we've had in 40 years, you start hearing these big records all popping off in the same week that are negative records that we haven't had in a long time. That's not good. I mean, that's, Captain Obvious here, but I mean, literally, I'm trying to let you know, like, when the big earnings, when the big companies, Amazon and Facebook and PayPal, a couple quarters back, started missing, that was like, boom, warning shot number 1, okay? Now, I'm telling you, when they start saying things like this, this is a major warning shot too. Okay, and I'm going to take you down the rabbit hole right now. I'm going to talk to you guys about a lot of things that you know, we need to pay attention to, we need to look out for, we need to be aware of, and then you can make your decisions based on that. And I'll let you know some of the things that I'm doing. You guys know that I was trading in and out, momentum trading, moving to cash every day. I was highly successful at that. I was putting my foot on the gas on the leverage bears coming down, ran this whole thing going up. You know, bought some stuff, small positions on good companies that are beaten down, good fundamentals. And as it comes down, if we hit a peak, I'll grab another 25%. If it goes further, I'll grab it. You know, I'll do that because I like those companies. But mainly right now, the best thing to do in navigating this market, there's a few things you can do. One is you can pick really good companies that have good fundamentals, and you can buy small positions, and then you can kind of like, you know, grab more as each technical support gets broken. You know, that way you have entries on support levels where most of the liquidity will change hands anyways. Another way that you could do it is you could stay out, you could be in cash, but your cash is being burned up by inflation, which inflation I don't believe is 7.5% at all. I don't think anybody really intelligent thinks that inflation's at 7.5. You got to understand something. They're not going to tell you that inflation is 22%. They're not going to tell you like that. They don't want pandemonium. They don't want people to freak out. The way that they used to record inflation is different than they record it now. They've changed it around to not calculate certain things. And if you went back to that old method, the inflation would be triple of what it is right now. Just saying, you know, and it sucks, you know, but you have to understand, like, they're not going to tell you the truth. Like, they're not going to tell you right now that, you know, fertilizer coming out of Russia. Actually, you know what? That's not true. Even though I've been talking about it for weeks, I did see two things on two different channels now about this. So we have a major food supply shortage. In fact, the consumer food index, I guess, it's at like an all-time high. Remember, everything works on supply and demand. Okay, so we had a lot of demand because we had a lot of money, and now we don't have as much supply because there's all kinds of issues. You know, getting materials or getting parts, and then, you know, transportation. So this is what I want to talk to you about, and this is what I'm doing. I'm sticking to energy, and I'll give you some tickers. I'm sticking to the indexes. Okay, I'm just either doing like you know, the SPY, the Nasdaq, or the Dow to go up or to go down. Keeping it simple. Going long on energy. I'm going to be grabbing some gold, like a derivative of gold, like maybe GLD or something like that. You know, just because last time there was a recession, I remember that, I mean, those gold pawn shops were popping up everywhere, and gold spiked like crazy in that '08 recession. I mean, it like crazy. So, you know, like I love crypto, but I'm an investor. Like, you know, gold is probably pretty safe. So I'll probably grab some gold long, have energy long, and then I'll run the indexes up and down carefully, assessing, you know, daily or hourly, just really assessing that. Realize that it is incredibly difficult to not get stopped out using regular stops. So what I'm doing is I've figured out a way, which I already knew about the way. I just took off the stops, and this would take somebody that, you know, it can sit in front of a computer and do this and trust the system that I do. But it's very simple and it works. And but you can't really have the stop on. And if you do have the stop on, you have to trail it like 2 pivots lower because it's just so violently whipsawed, and it just sucks because they come down and get you, and then it goes up or the opposite way, and it's just kind of annoying. So look, getting rejected is really bad. This thing could, you know, everything is set up for like an economic, like, super bubble problem, guys. This isn't, I'm not just worried about a recession. Okay. I'm like 90, 90 is a good number. I'm about 90% sure we're going to have a recession. Okay. I'm pretty darn sure we're going to have stagflation too. And there could be this thing that sometimes the government does that's horrible when they do it, and it's such a bad idea, but they could put price controls. And I'm going to walk through all these and explain kind of how we got here, why it could happen, what we need to look out for, some things that maybe, I don't know how old you guys are, some things that maybe you should think about, because these types of environments get very, very tough, and they can wipe you out. So you got to be really careful, and they can wipe you out fast. You saw Bullard came out Thursday and literally crashed the crypto and stock market in one day single-handedly. He did not have to come out and say he was, in favor or endorsing 100 basis point rate hike. We already knew he didn't have to do that. That was staged. That was planned. This is all a setup. These things that are happening, they want to deflate the stock market. They want the prices to come down. They want to get you thinking about an emergency Fed meeting. Look, guys, we're not at 7.5% inflation. We're triple that, okay? They printed too much money. They are screwed. We are screwed. We are paying the price. They screwed up. We're paying the price, and it's going to get worse. And I already know pretty much what's going to happen. I already know what's going to happen. I want to put you guys on notice. So where do we start? Because I just started running, talking about all this stuff. So look, the first thing we should just talk about is, guys, get in my Discord. Just get in the Discord. The link is in the description. You want to upgrade, you want to do all my courses, you want personal one-on-one coaching, click the start here and subscription. I'm going to be doing a code for the rest of the month where it's half off for the annual. And we will make that code, I'll make it tonight, and I'll make the coupon code green lights, okay? And we'll see what, we'll let you guys have that for half price for the entire year. You'll have one-on-one coaching, the Wheelhouse Wednesday group trainings. You'll have access to all the areas in the Discord which you can't see when you first come in. You'll have all the courses and trade alerts and stuff like that. So, do that. Let's talk about the inflation. Okay. So we had COVID. Okay. We had a pandemic. It happens about every 100 years. When there's a crisis or something really bad in the economy, it shows up in the Dow. Well, this is the Dow. You can see you got the red cloud, the red ribbon under the 200. This is where the accumulation phase started. Okay, this is when it gets safer. And of course, when you get past your previous all-time high, like I was explaining up here, if we were to get back in and get above that, that would be great. But once you get above there, it's truly like safe, and you have the participation phase, and then you go through this bubbling top and this distribution phase, and you break a primary, you get rejected, and then you start going down, you start bumping your head on this, which could be, we don't know how far it's going to go down. I could tell you where, major supports are. There's one right here. We could look at something like this. But we can also look at something like, we can come a little lower. Oops, sorry about that, guys. All right, so we could come down like this. I don't think so, though. I honestly don't think so. I think that realistically, I think this is probably the lowest one. I think this one, because typically what they'll do is when they completely come down, they'll come down like to the top of the previous high years ago. Go look at PayPal. Go look at Facebook. Go look at BABA. They're all going back multiple years to that exact spot. It's just how it works. So now that we've been rejected, I think it's very possible we could come down 5,000 points on the Dow. It's possible. Oh, that would be bad. Okay. All right. So look, we had this pandemic. All right. They made a V-shaped recovery. They put a lot of money out there for supplies and stimulus of all kinds of different types. And they told you to stay home. They sent you checks. They propped up the market. They propped up the stock market. And I've just had the Dow up, but we could look at all of them. The NASDAQ and Russell went ham. I mean, they went crazy. That's where high growth is, and that's where you want to be when you want to make a lot of money. It's higher risk, but when you want to hold on to your money, you want to be in the Dow. But remember, the Dow is the strongest. It's the last to break. And that's why on this video, I'm trying to explain to you, getting rejected on the Dow on the primary at the same time that we're about to fall through the 200 and we've established multiple lower highs to create a new downward direction on a new primary trend. This is bad. It's bad, guys. So how do you deal with it? Well, yeah, you can have deflationary pressures with technology, but we got supply chain shortages, and the supply chain shortages are creating so much inflation. Okay, they can't get materials. Okay, so they can't make products. So people are over ordering. Okay, eventually that's going to be glut. And at the end of all the stories, it's all going to come down to you and me not wanting to buy. Okay, because at some point, you're going to be at a point where you're going to say, should I buy food or should I keep the utilities on? They're going to get rid of things like subscriptions, the Disney Pluses and the Netflixes and all that, Paramount Plus, all that's going to, people are going to take that out because the prices of food are so expensive. They're going to choose food over that. And then what's going to happen is they're going to have bad quarters, and then that's going to create slowing growth, and it's going to happen everywhere. Peloton just laid off 2,800 people or 2,500 people. It's already starting. Microsoft already acquired Activision. It's already starting. The big ones are consuming the small ones. It's a consolidation of the industry, and it always happens at this moment. These guys are waiting for this. You think oil and energy, they knew inflation was coming, and they know that when there's inflation, oil and energy goes up, they're going to start consuming people. They probably, if they were smart, they were holding on to their money while everything was down and low, knowing that it would come back in its cycle, rally to no end, which it is right now. And yeah, and you basically just basically want to be long energy, probably long some gold, you maybe some cash, and then you want to play the indexes. If you're going to short, don't short stocks. Individual stocks right now, just too dangerous, too many things. Just short the index. It's really easy to read the trends on indexes, and they all move in a group. It's a lot easier, and I'll kind of show you a little bit about how to do that. But this is classic distribution, guys. This is classic distribution, but coming below the primary and getting rejected. It's just another one of those signs I always tell you about when this happens. You can pretty much the probability of this happening, it's going to happen, and since that happened, the probability of it's going lower is much, much higher right now. Okay, especially because it's on the Dow. Now, you had Bullard come out 100 basis hike. By July, that would mean yeah. So you'd have a quarter point on every single one. I came out a month ago, before they were talking about it on TV. I mean, they just had that minutes meeting, and they were, we just got 7% inflation. Nobody was talking about it. And I was, and I talked to people, and, they're like, yo, the word is that, this could be as high as 8 hikes and as low as 3, most likely 4 and 5, and there could be a 50-point basis hike in there. And here we are 3 weeks later, and they're talking about it on the news. And, I'll just tell you pretty much they're going to probably do that. I mean, okay, look, let me just explain it to you like this. If inflation was 7.5%, which, by the way, it's not. It's way higher. It's triple. And second, if inflation was 7.5%, They would have to raise interest rates above 7.5% like that to combat inflation. So doing these little quarter point basis hikes is not hampering it down. It's certainly not putting the genie in the bottle, and that genie is not going back in the bottle, guys. Sorry, too late. It's a problem. We're going to probably have a recession, most likely, high likelihood, up the road. The crash already started. I mean, the crash is already like starting back in February. And remember how I said the small caps go first and they'll try to rally? Well, right now I believe that we're trying to have that rally on the Russell. It's always the same. If you just study history, So this is the big rally and the stimulus. Here's the distribution, the range-bound railroad tracks, fake out, breakout. Double bottom, lower low, boom, break its major support, and now you got the higher. You're trying to create this new direction. You're trying to make the higher highs and higher lows and create this new direction. But this is like one of the final things before it always breaks. So you have the small caps break. You have the multiple. Pullbacks, which is like boom, boom, boom. Okay, you have that, and then you have railroads and heavy equipment manufacturers rally towards the end where that's happening. That only happens at the end, right before a bear run starts, and impending recession. That's happening right now. You have about 15 things historically that always happen. It's like a checklist, and pretty much every one of those things are signed off on. Just about every single one. There might be like one or two that's not. So, I mean, the scales are tipping. The odds are in the favor to come down, and it doesn't matter what the catalyst is. This Ukraine, Russia. Look at China coming. I think is it Taiwan? I mean, oh, guys, we don't want nobody shooting at each other. We don't want U.S. troops shooting at Russian troops. We don't want Russian troops shooting at Ukraine troops. We don't want war. Like, that's not good. And I can do a video on like all the things that happen during a war. There are like good things that can happen like in the defensive sector, and there's ways to play that, but there's also a lot of bad things we can talk about. But look, bottom line is that's not good. The inflation is a big deal right now. We got it for a long time. The Fed certainly does not care about your stock value. So you want to be in cash, gold, long energy. Just be where the money is right. Don't be in all these stocks right now. Be in like just run up TQQQ when the NASDAQ goes up. And then when it I use the ribbons as an example. Like, I'll just show you, like, very simple, guys. Very simple. Go to the 1 hour. Okay? Just go to the 1 hour, and if this ribbon right here is red and you're under this purple line, you just buy SQQQ. You buy SQQQ, and it's a perfect time to do it. I have a bunch of it for the that I bought on Friday, and you just let this thing run on the hourly. Okay, it got rejected off the 200 on the hourly. It's got a red ribbon. These are all hours. You can tell you're going to make money going down, even if these big pullbacks. I mean, as long as you're in that red ribbon and under the 200, do it. Now when things are good, you want to be in the blue ribbon above the 200, and you want to run all these hours going up on TQQQ. And it's rejected, and you buy the red, and you just do that, like on the hours. Just go TQQQ to go up, SQQQ to go down, inverse trade. Same with the SPY, use SPXU to go down, SPXL to go up, and then use, what I do the NASDAQ, and then for the Dow, use UDOW to go up and SDOW to go down, and then you can add in, get a little bit more tricky, and you can add in like HIBs and HIBBLE and WEBs and WEBBLE, and you can add in like that kind of stuff, and DRN and DRV, and NRGU and DRIP, and you can get a little crazy, and you can even do the triple leverages on the gold. I haven't done it before, but I think there's one called Dust. I'll look it up because I'm looking into maybe doing something like that. But yeah, I mean, you just can't use the stop, unfortunately, right now in this market. It's just too choppy. But if you just trust the ribbon and the trend, this now a lot of people trade where they're like, they'll set their stop on the 50 and they'll get out. This is the 50 through the 20, but the thing is that it doesn't, like the 50 would be on the top if it's red. The problem is that it doesn't turn color right at the 50. It actually turns color when the direction is more established and it changes direction and it's safer. It has safety built in to that. So it's not just your cookie cutter method, which is great, by the way. It's just it adds a level of safety to really get the direction and momentum right for safety purposes. I like safety, direction, trend, and following a system very well. Now, this is rough. I mean, just look at this. Look at this. Okay, you buy this and you go up and then boom, comes way down and it's all thin and boom, it's rejected. Well, yeah, you weren't supposed to buy to go up unless you're above this, guys. You don't buy long unless you are above the purple line and you have this condition and this condition met. That's how you do it safely. And then same thing here, like this one's coming down. Well, it's best to buy it when it comes under this thing and just, run it. And then when it changes right there, you just get out. And you got a little faked out here, but boom, you fell right back. You make your money back right there. Same thing, you can see it coming. It gets above there. You buy it. You got this wobble distribution. And luckily this one, I mean, from here to here, it is a profit. Yes, there's peaks, but I mean, safely following that system works. And when this thing gets rejected and goes red, like, yeah, you just buy that SQQQ and you'll make a fortune on it. I was looking it up last night. I looked at the 8 top ETFs for like the NASDAQ. And the one that I'm telling you about is up like 30%. All the other ones are up like 12%. Like run the indexes up and down and put your foot on the gas and just eliminate all the stocks. Like don't worry about all the stocks right now. Unless your goal is to buy really good companies and buy small positions every time you get to a technical support. But you might run out of money. When you can only put gas in the tank and only go forward, like to go long and only add money, dollar cost averaging, this market can really hurt you. Why is that? Well, because not everybody is made of money. Not everybody can go buy a 25% position every single time that you have this new peak to go short or to go long, sorry. So you buy here to go long, let's say, and it goes up and it fails. And right here you buy more and it fails. And right here you buy more and it fails. And right here you buy more. And I have a feeling a lot of people that go long in DCA don't even know to do it at technical supports, but whatever. Same thing here. You buy more, you go up and it's coming down and eventually comes down. You're just going to run out of money, especially if you have a whole bunch of positions. So if you just run the ribbons on like the 30-minute or the hourly by the color with a couple conditions and you just run up and down on the indexes, you will do good. I'm not even trying to mess with all the stocks. I mean, I did buy some, 0.25% and even 50%. And, those literally were up. I was probably like 55% green and like they're pretty much all red right now. And what I did was I hedged. So I put my foot on the gas on the SDOW, the SQQQ, and the SPXU for all three of the major indexes. I didn't do the Russell. Although your best short would probably be the Russell if this thing really comes down. And the reason is because a lot of those companies in there don't have big earnings. And earnings is the key to everything. Understanding the economy is kind of the trick, and understanding the stock market. Short term, not long term, but short term meaning years. I'm still meaning years when I say short term. But long term, like centuries, no, it's all going to go through. It's like things. Everything goes in cycles. Like right now, the credit market is coming for you. Pretty soon it's going to be the gold is back. Right now it's energy that was down. It'll be airlines. Everything rotates. It'll be retail. It'll be banking. They all rotate. That's why there's sectors and industry groups. They all rotate. They all get their time in the sun. They all get their time in the shadows. It's just how it works because it all pertains to the economy and these sectors rotate within economic conditions. Okay? So economic conditions get poor, shows up in the Dow. Feds raise rates. They create a recession. They actually do that to protect the world reserve currency. essentially, if they raise rates, there can be more lending and more money is being used, and it goes into working and taxes. It just goes into a lot of things, but essentially it strengthens the dollar, which will hurt crypto. Just like raising rates and strengthening the dollar will hurt crypto. Okay, as inflation comes down, it'll hurt crypto. So like if you're ever we're gonna put gas in the tank, dollar cost average, and go like only go one direction, crypto is a cool way to do it. I trade it, and I trade it. I'm pretty good at trading crypto. I can get in there and make some pretty good money like with crypto, but I'm trend trading, and I'm watching it intently, and I'm not over trading too many cryptos at a time. I really like Solana. I really like trading Solana. I love trading Bitcoin. I love holding Ethereum and Bitcoin, but I like trading Bitcoin more than Ethereum. It's got more like volatility. I like Avalanche. I like VeChain. I like Matic. I like like Decentraland, like Mana. I've been looking at Sand. I like some of that stuff too. Chainlink. I really like Chainlink. There's a bunch, and I kind of just stick to my wheelhouse, and here's I know I'm all over the place. It's just because I got a lot on my mind and a lot to talk about. But one of the things that I do in times, well, not just times like these, but all times, it's just in the back of my head, is I call it a fail safe. Okay, and you guys should think about it as a fail safe as well. No matter what happens in the market, if the first thing you do is pick companies that will not go bankrupt, that have really good earnings and great products and services and institutional support, boom, that's your fail safe. So what if Nvidia went down $20 the other day or whatever it was? It's Nvidia. Don't you feel more comfortable sleeping at night, even though it came down a little bit in value in your portfolio on Nvidia, that it's Nvidia and there's a chip shortage and they're a leader in the chip industry? And to me, that makes me feel better. That's a fail safe. It's like, okay, we can deal with it. But you go get some company with no earnings, no growth, no revenue, and you start buying stuff like that right now, where's your fail safe? Like, that's not, you don't want to do that right now. You don't want to do that, Everything's about to come down. I mean, look, even Tesla came down at $40-45. Like, it's all coming down. Again, I am past the point of shorting stocks. I'm gonna do inverses on the indexes. I'm gonna go long, probably gold or derivative of gold. Long energy for sure. I have my plays on energy. What they are is they're SM Energy, Matador Energy, NRGU triple leverage, my favorite. BTU. Let me show you Peabody. Crushing it with this sucker. Check this out. Look at this. This is what you want a chart to look like for all y'all that don't know. Okay. This is the daily. Energy. What the hell? Okay. Look at this chart, guys. Look at this. There's your blue ribbons. Look at the momentum. You can see I've been trading it. See the red and blue? That's buys and that's sells, all on the same page, just in and out, because I do the smaller time frames. But look at your indicator. I mean, look at this. That's what you want. Like, you get up here, you're in a breakout. I mean, this thing is like crushing it. Let's back it up to a 4-hour. Bullish. Back it up to a 1-hour. Hella bullish. Why not be in the sector that's going up if you want to go long? And energy's where it's at, guys. So yeah, I mean, BTU, definitely. SM Energy, Matador, anything you want. You can get ConocoPhillips, Chevron. I'm not doing that. I like to mess with this Peabody. I like that. My favorite is just the triple leverage, honestly. Like, I just put my foot on the gas on the triple leverage. I'll show you. Let's see. So this one I really like a lot. I'm a big fan of it. I mean, crushing it with this thing. I mean, this is like, it's just straight money. You get paid like non-stop. You can just stay in. If the ribbons are blue on the hour, you can just stay in. Now, it's best if you buy when it first does it and it's above here, But I mean, essentially, last time, you come to the hourly and you look at your pivot low, like a traditional trader, traditional swing trader, you would wait for that moment where it had a couple down days, establish a pivot low, made its first blue candle, you'd buy there, and you have your stop here is low risk on the hourly. Your stops on the hourly are better than smaller time frames, but realistically, I just take, like, I'm at a point where, like, pretty much all my trades make money until I put a stop on them. And I've just realized, like, no, dude, just run that ribbon. Just literally, when it turns blue, if it's above here and it's the right sector and everything, you got everything else I talk about, institutional support. I look at all of it. I look at the earnings. I look at all of it. But you grab it, and then you don't worry about these liquidity wicks that come to the 50 and again in the 50 and below the 50. All these people get stopped out. No, you take the stops off because this is the type of choppiness that's kicking your ass right now. Okay. Oh, look at all of this. That's meant to get you out. That's what market makers do. There's liquidity wicks. It's doing it on purpose. So that's the problem. What's the solution? Well, the solution is the opposite of what I normally tell you guys. The solution is actually take the stop off and like manage your trade really good. You actually just do your two conditions in the right sector with everything that clicks, and then you don't put a stop on. And maybe you pray at night that it's going to keep going with the blue ribbon, but I mean, all this is just noise. This trend right here is all that matters, okay? And this trend is basically trending the way you want it. So that's how you got to follow things. You got to take out all this chop and all this noise, and you got to just wise up. You got to say, we're coming down. Now we're going up. You simplify it. Reduce the variables like your teacher would teach you in 5th grade or whatever it was. The shortest path to point A to point B is a straight line. Start using straight lines and trends, and I come down and I run it like this on the minutes, guys. I basically am like, oh, same thing. You're above the 200. You got your blue ribbon. Boom, you buy it. You just stay in that trend. And then what I'll do is I like to sell right here when it gets red right there. And it's going to turn. And when you get a floating candle, so I'll get out and I'll just kind of like, boom, I'll rebuy back in here on the cloud. And I'll just run it like that, And it's very successful for me. And of course, I pay attention to all my stuff over here too. But you can see like this SQQQ and all this stuff. These are all set up for Monday. Like these are all going to be like good ones for Monday. So yeah, I think you should, the market comes down, which it's going to. I mean, look, you just got, that's on the minute. Yeah, so SDOW. So that means shorting the Dow inverse. So you want this to be blue, okay? If this is blue, that's good, okay, when you're inversing. So it's coming up on the 4 hour. It's already there. This is why I grabbed it, because you got your blue ribbon and you're above here. So I know it shows a little negative right now, but it's not going to be a problem because we're coming into like so much negative stuff this week. I mean, this week is going to be hell. It's going to be hell, like from all walks of life. Like, yeah, unscheduled meeting. We don't know what that is. It could be, hey, emergency. We're going to up the rates really fast. That's going to destroy the markets. I don't know if they'll do that or not. We'll just have to see what happens. Goldman's estimating 7 rate hikes. Bullard, we talked about that. Bonds are up. The Fed is supposedly behind the curve, and the curve is inversing, and bonds are up, and all these things are like not good. These are leading indicators, guys. Commodities rise in inflationary environments. I mean, that's all has to do with supply and demand. Same with energy. Like coal is going through the roof. This one guy was like just a coal miner or whatever, and he's now the 10th richest guy in the world right now. Like energy is booming. So just be on that energy right now. Like I showed you that one chart or a couple charts, be on that stuff. And let's see what else. So we have bonds. people are flying to bonds at like still a very low yield, which has a negative return against inflation. So eventually, that's just people that don't like know what to do and they're safe havening it because it's just such a volatile time, and you're going to see that happening with gold too. Um, let's see. So Biden spoke to Putin. I didn't really see too much about like any change in the narrative other than he warned them again. I mean sanctions with through NATO allies and whatnot. But yeah, I mean this whole like look. So when you have like a war like this, potential like geopolitical issue going on, what's going to happen is it's not going to destroy the equity markets like raising the federal fund rate or inflation will. But what it will do is it's definitely going to um, raise like commodity prices. Like right now, the thing that you got to know, and I just told my mom this. I just literally told her. I said, "Look, you need to take me serious. Like they're not going to talk about it on TV. Well, they haven't for a while, but I actually just saw a major report on what I'm about to tell you, which made me feel good because they've been holding this back from you. They've been holding this back from the American public, and this is a dangerous thing to hold back from the American public. Um, we're about to have a food shortage, food crisis, and it's not we're about to. It's already started. Okay, just like I told you, like hey, back in February and March of 2020, the small caps are breaking. That was actually the beginning of the bear run. Okay, people didn't realize it yet. They didn't even realize it until like a month ago. I've been trying to explain like how this stuff works. Seems like me and Jeremy Grantham are the only ones that really understand history. But all these other guys are starting to figure it out, and I'm very happy that they are because they're giving out the correct information now. It's you can't base your investing on hope. Okay, you have to base it on logic, and you have to be very smart with it. And you need to know if you're going to do stock picking, you got to be in fundamentals, and you got to trust that over time it's going to do well. Okay, and you can dollar cost average on that if that's your way of doing things. Me, every single thing I try to hold right now is just going to go down, and I can just make everything go up if I trade. I mean, I can make so much money trading. I can't make it just holding it. There's just no way in this environment. You could buy PayPal at $112 a share, and it's going to come down more. I mean, it could come down to $80 a share. I mean, but you could trade it down, and you could trade it up, and you could ride the direction. So that's something. Yeah, look at this Energy U. I was telling you this one. I love this. It went up $32.45 Friday. It's crazy. Yeah, I mean, what else? Okay, so you got geopolitical tensions that's going to raise commodities. So that's what's the solution? Buy commodities. So coal, uranium, whatever, nickel. I like the idea of gold and energy. Simple, don't have to overcomplicate, and I like just running the indexes up and down, heavy, inverse or triple leverage, trading, What else? Supply chains. So here's the big one, the food crisis. As you know, like you go to the store and there's shelves empty. Well, they're not really saying much on the news. I did see a report finally, but what's happening is this is kind of a long story, and I'm going to try to explain it like as simply as I can. So let's start with fertilizer. So the U.S. imports a lot of fertilizer from Russia. Okay, supply chain. Okay, that fertilizer is bought. Okay, by farmers and cattle ranchers and agricultural people that grow food for us and whatnot, and they'll buy it, and then it needs to ship and transport, which is the price of the fertilizer is inflated, the shipping and transportation is inflated and delayed, and then by the time they get it, They need to use it, and the cost of everything to ship it back out is really expensive. So you have inflation, and delay, and now you have the geopolitical tension with Russia, and we only import a couple things from Russia: energy, natural gas, oil, and fertilizer. We don't really import that much from them, but now we have this fertilizer issue, and Europe is having a natural gas issue. So you have them holding it back, inflated costs when we get it, big delays on getting it, inflated shipping and transportation. Then when they get it, they have to basically sell it to the store at an inflated price, the wholesalers, which is call it your Albertsons or Costco or Walmart or whatever, these kind of stores, wholesalers. And then, that price increase is passed on to you and me, the consumer. Well, at some point, the consumer is not going to pay. I'm just going to tell you, at some point, the consumer is not going to be going to the movies. So AMC is going to come down. They're not going to be paying for Disney subscriptions, so Disney Plus is going to come down. They're going to have to make a choice between keeping the lights on or putting food on the table. It's already happening, okay? You have to get yourself some cans of food. You have to get yourself some water. You gotta stock up on this, because they don't want to create pandemonium. They don't want to create riots, but it's gonna go down. Because people don't like it when they don't like it when you tell them the truth, and then they don't like it when you withhold the truth. And I'm just telling you, the truth is we're having a full-blown food supply shortage, and we're at the beginning of it. And so what's going to happen is these farmers and stuff, they're going to sell it to the wholesalers who are willing to buy it, and then they're going to try to sell it to us, and at some point we're going to say no. We're going to stop going to Starbucks because they had to raise prices. They had to raise wages for the employees to work there, and then they raise the prices for us to buy it. At some point, people are going to say, I don't have a $900 budget for Starbucks coffees 30 days a month. At some point, okay? Whether it's not happening now, it might be up the road. And then what's going to happen is their earnings are going to go down, okay? Their sales are going to go down, and it's going to show up on their earnings report. Disney's is going to show up in their earnings report. They're going to have less subscribers. Same with Netflix. Same with Peloton. Same with, people are going to buy expensive Nike shoes. It's just going to go around the board. It's going to show up in the earnings. It's going to create slowing growth, and there's a recession. Meanwhile, back to the food, you got two things. You got the whole supply chain. So you have the materials manufacturers, transportation, wholesale, and retail, okay? What I want you to think about is the wholesaler, so like the Costco, and you, the retailer. The wholesaler is willing to buy it, and the manufacturer is willing to sell it. So there's not really a problem there, as long as the manufacturer can jack the price up and the wholesaler is willing to pay that price. That is working right now. Okay, but the demand is so high from us that the wholesaler can't get enough of it because there's shortages on materials and manufacturing and all kinds and employees and all kinds of things, right? So then you have the retail guy. And right now, the retail guy is willing to pay more for tuna and salami and roast beef and bread and bagels and cheese and milk and everything you can think of, tomatoes, whatever it is. But at some point, when this part of the supply chain or the whole chain breaks and they can't buy it or they're not willing to, well, then there becomes glut for one, and that's going to happen in this chip industry, and it's going to happen. I'll get into that in a minute. Let's stay on food. So when the consumer stops buying, then what happens is the government will step in and they'll say, well, the consumer's not buying, so our GDP is going down and all this, people are being laid off and, and we're going to put on price controls. If you hear anybody talking about price controls, you better be scared, because it never is a good idea. And if the government comes out, and if there was ever one administration that would do it, it would be this one. And you'd have price controls, and what's going to happen then is the manufacturers are going to say, screw it. If I'm paying more for the fertilizer, and I'm doing all this work on my cattle ranch or agricultural farms and whatnot, and then there's price controls in an inflationary environment, like I'm paying more for this, but now I can't sell it more. So this guy, the manufacturer, is going to pay more, but then this guy, he's not going to pay as much, and neither is this guy. So now the chain is broken. So this guy that's manufacturing it is going to say, well, we got price controls and I'm not making a margin, therefore I'm not going to do the job. I'm going to take a year or two off until this inflation thing is figured out. So more layoffs, more unemployment. This is how it works. You get more unemployment as the recession goes on. Remember, the Dow will lead you in, businesses will fall more after, and unemployment will rise, and then the Dow will lead you out, and more jobs and industries will come back. That's just how it works. Okay, there's leading and lagging indicators. There's 23 leading indicators into a recession. I don't even know how many lagging ones, but the leading ones are the most important for this topic. So in this whole chain, you got retail that kind of controls it because there's the demand, and then you got the supply. And if the manufacturer says, I'm not making enough margin, then the guy in the middle is laying people off. This guy's not buying because he can't afford to anymore because gas is so high and everything's so high. And then this guy's saying, screw it, because of price controls and margin. Now you have not only the shelves 35% empty now, but you have an even worse situation because the wholesalers can't get it because the manufacturer stopped doing it because there's not enough margin in it, because before him on the materials and supply side there's inflation, and if there's price controls in the United States, it will not affect manufacturers. It will affect everybody in the U.S., but if they purchase from outside of the U.S., those people aren't going to be subject to price controls. So I just see a lot of major problems coming, to the point that what you need to focus on is, if you don't want to worry about any of that stuff I just said, then this is all you got to know. Number one, the primary trend is coming down. It could come down pretty far. Number two, go get yourself some canned food and whatever, soups and waters, and just be prepared for that. Number three, tighten your belt. Number four, refinance at a low rate, or consider just tighten your belt, okay? Maybe eliminate some things that you don't need, or you don't, get rid of some of the wants and hold on to the needs. Use that logic in the stock market. What do people need? They need energy. They need food. They need utilities. So common sense, go to that. What happens in really bad economic times? Gold, get gold. What happens in big inflation times? Energy, get energy. Get rid of all the noise. Use the indexes. Follow the trends, okay? And just be prepared for all that stuff, because they're not going to tell you until it's too late on the food thing. And that's going to create pandemonium and riots. And they're going to hold a lot of stuff back from you guys because of the midterm elections. This inflation is bad. You get the war stuff. I mean, all these catalysts, it doesn't matter what the catalyst is. They always happen, but the charts are going to show it. And the charts are showing, we're in for some troubled times. And I think people think it's bad, but I don't think people really understand how bad it could get. If you're gonna DCA, you're gonna run out of money. That's how bad this is gonna get. So if you're gonna DCA, you need to do that I wouldn't even DCA until this thing literally comes all the way down and you get your first blue candle. So 7, 8 purples and your first blue, then DCA right there, let it do its thing, come down. Next time it comes all the way down with the purples and you get a blue, grab another one. Because if you're just every Monday, I don't know, this is gonna be dangerous. It's gonna be dangerous. I mean, look, I got a big property that I'm in right now. It's an estate on the water. Okay, it's not a mansion, it's an estate. I have a lot of equity in this house, and I put a lot of my own cash. I wired the money when I bought it. Well, since I bought it, it's already up 700, 800 grand, boom. And a house like this will come right back down 700-800 grand like that, like in a matter of like a 6 month window. I've seen it before. There's a lot of things a lot of people don't realize. Like, okay, last time there was a session, I lost $10 million of my money. I will never go through that again. I was young, I was 28, I just did not know the things that I know now, okay? Gold pops off in those kind of times, so it's not bad to go long gold. Even though gold, and I agree with Michael Saylor, and I'm a huge crypto bull, I'm just saying, like, it's just not a bad thing to put in your portfolio. That's all I'm saying right now. It'd probably be pretty smart for you, to be honest, because, you know, when this stuff goes down, that'll go back to 23, 2,500 or whatever. Or it won't move that much, and it'll be like a cash park, which is fine too. It's totally fine to have a cash park. The goal is just to kind of beat the inflation, you know, so that you're not losing pricing power. That's the goal here. And just to be aware of everything and to be like moving with the direction, not fighting the tide, not trying to like go long when you're coming down. Like going long when you're coming down, like buying the dip, is how people are going to lose everything and get put on the street. And they might not realize it. They might not remember it. They might not understand it. But I'm going to tell you, like, unless you can like hold through years of it, like even YouTubers, when this stuff goes down, people are not going to be watching and viewing YouTube. They're not going to be subscribing to people's Patreons and Discords because they're going to be so freaking broke and so stressed looking for jobs. They're not going to be like, you know, investing unless they're pro traders, you know, like I'll be in it. But I mean, it's going to get really tough for people, okay? Especially if there's like not a lot of food. Like I already saw something on TV. They're talking about lines around the corner for food banks. I've been trying to tell you guys this for weeks. Like this is going to become a problem. Like they're trying to keep it under wraps, but it's starting to surface. And now it's surfacing on the big channels too. The CNBC and Bloomberg have both done something on the food thing in the last like 24 hours. I saw. So it's making its way to the news, and this is just a major problem, guys. This will show up in the Dow. Because remember, the Dow is the barometer for the economy. So back to the economy. So if you have the supply chain shortages and you have the inflationary environment, you have the fund rate going up and discount rates, whatever, and you have, you know, all this going on, you think, okay, well, they're raising rates, financials will do well. Well, I thought about it. Back in the last recession, I was a developer. Okay, I was making $1.6 million a month. And I had lost like 10 million during that. It was a devastating situation for me at that time. I had no idea like what was going on. But what I will tell you is this: lenders, they stopped lending. Okay, they stopped refinancing. They stopped letting you purchase. Like it becomes really, really tough unless you have the most immaculate 800 plus score. Everything is, I mean, perfect to the T. Because as values on homes are coming down and depreciating, and they come down really fast when they do, like so fast that people are trying to sell off their houses to a point where they have no equity. So they lose their money in the stocks, they lose their money in there. You get the foreclosures, you get the housing crisis, you get the stock crash, you get all this crazy shit goes down, and you know, people kill themselves. There's divorces, people are separated from their children. I know it's bleak, it's grim, it's dark. But I'm just telling you from firsthand experience, I actually remember it really well. I remember the stuff happening. I remember losing money. I remember losing my homes, my cars. I remember losing my cash. But I remember people losing their businesses. I remember entire industries like getting like mollywopped. I remember people getting divorced. I remember all the bankruptcies. I remember all the foreclosures. I remember the REOs and the tapes. I remember banks going out of business, like Washington Mutual, and you know, it goes on and on and on. So when there's a big economic turning point like there is now, when you have a directional change on the Dow and you get rejected off a primary, you know, you might have thought this was the beginning. Yeah, it's going to be dirty. And then what happens is when people are suffering and they're out looking for jobs and industries are collapsing and you know, businesses can't actually pay for all the people, and the people that they start getting laid off, and the industries go, and then there's more unemployment, and the unemployment starts happening even more during a recession. Yeah, not good. So, I mean, look, Peloton just let a lot of people go. You know, I already talked about that. Oh yeah, let me just tell you. So again, like these, like I'm talking to this girl right now, right? Because I was like, hey, you know what? I think like the economy is going to get like hit pretty hard. I should probably like maybe do like a, maybe do like a little refi on my house and which is pretty much almost paid off. But I was like, well, maybe let me pull some cash out, just to have like like 5 years of living there, and then I don't have to even think about it because I think it's going to get bad. And it's very expensive to live in my house. It's 125 grand a year to live where I'm at. That's just bills, not any extras. It's not even going out to dinner. That's not even going to Vegas. It's nothing. It's just 125 racks a year straight up. Boom. Like if you have a really bad stock market, a really bad economy, and it's just hitting the fan everywhere, and you got to lay out 125 grand a year, and people aren't subscribing and they're not going to YouTube for finances because they're freaking stressed out. Like, yeah, I got to think about that, right? So I don't want to be, trying to sell an estate, which is already going to be difficult to sell because it's a very large house. Although it was the mayor's house, it is on the best street and it is on the best part of the lake, and it has incredible amenities. And 3 of my neighbors are selling their homes, which have less square footage, less bedrooms, less bathrooms, and are not as remodeled as nice as mine, for a pretty significant penny. So I either like can do this refi now before it gets all crazy. I already locked in a rate. I'm just waiting. And if I get that, great. If I don't, my girl and I are talking about, dude, we could sell at the top. We can literally sell at the top. This is like investing 101. Buy low, sell high. I love my home. I don't want to sell it. But at the same time, I have so much money in this freaking house. Like I could literally have several millions of dollars in cash, and then I can run that in the stock market, and I can also wait until prices really come down in the housing, and I can get a super sick house like this one at a big discount to live in, and then I could buy like 2 or 3 more houses that are really nice houses that are probably like 800, 900 grand right now, and I can get them for like 400 or 500 grand and buy a few of those. I can even buy those cash and then just rent them out, and now I have a nice passive thing going. And then the next time there's we run it through the bull run, we make a ton of money, and then we sell at the tops again, all the real estate and all the stocks, and then we just write it down and we make adjustments in our lives, and then we hit the bottom again. And by the time you do that for 3-4 decades, I'm an old man and I'm balling, but it's these transitional moments that are very hard to make a decision on. It's hard to not be emotional about your property, especially because this is my dream home, and I worked really hard in my life to pay cash for it, and I have a little bit of debt, but mainly I pay cash. And same thing with my cars, my boat. Like when I bought my Bentley, I didn't know what I was going to buy. I was like, should I get a Rolls Royce? Should I get a Ferrari? I'm too big for a Lambo, and like some of these things I didn't like, even though they're super sick cars. But the Bentley fits me because I've always been a Mercedes guy, and I like luxury vehicles. I went there with my computer and I put it on the desk and said how much, and I wired him. With the boat, I went and got a cashier's check and went to the dude's bank and like did that, and just like same thing with the house. Like the reason I got the house is because I was a cash buyer. I moved fast. I was able to do it. But I'll tell you this. I want to sell at the top if I'm going to sell. So I'll refi and pull out money for safekeeping, just have a pad for like 3, 4, 5 years, just sitting there. I could just whittle it away. Like it sucks, but a lot can happen in 5 years. We can go through all this drama, and then there can be a lot of really good business moves made along the way, and you can make all that money back that's being whittled away. But at least it's just on the side, and I don't have to like dip into like pull out of stocks and like do any maneuvering. I can just pull it out of the house, let it sit there, let it bleed out a little bit on payments, and just enjoy life. There will be always opportunities, whether you're coming down with the market or you're finding a nice business to get in, or you're buying distressed homes, or there's always going to be opportunities, especially in the downtimes if you have money. And so, yeah, I either get that and I hold it, or me and my girl are considering sell at the top. several millions of dollars extra in the bank, and then just kind of wait it out for the perfect time to snap up a bunch of homes. Because I mean, if the market's going to crash, which it already is, and we're going to have a recession, which we most likely will, guaranteed the housing is right behind it, because it is always right behind it by about 6 months, 6 to 8 months. And a house like mine, it's going to fall hard. It's a big house. So I don't know. It's on my mind. I haven't made any decision. I really don't want to move. And I really, when I bought this house, was like never going to move. I also was never going to refi. I hate debt. I hate debt. Although the debt that I'm getting isn't bad. It's not bad. In fact, I don't need to tell you all this, but the debt is not bad at all. It's a fixed product. I would pull cash out, and actually with taxes, insurance, fixed product, cash out, everything. But yeah, a lot to think about, guys. Go with those trends, find your system, get in the Discord, let me help you. I'm trying to help a lot of people. I really like this gal that hit me up. She hits me up randomly, but she's in the Discord, and she hit me up today again. She goes, dude, your ribbon strategy is gold. And the picks that you give me, so she ran my triple leverage oil, and she ran it on the ribbons, and she's like, dude, the stuff you do is just golden. Like how you, and I do. You go in the Jedi compound challenge. I'm up, even though I lost like almost 200K between Thursday and Friday, I'm still up 160% in there. So you could see, and you can also see some of the how I do things. And what I did is I would have come down a lot more, but I put my foot on the gas on those inverse indexes. And I mean, I put my foot on the gas and I hedged it. So as everything was coming down on my longs, those ones were going up at a significant rate to kind of keep me like at bay. And then when these started to come down and the longs started going up, I just sold all these at a profit and let these run up. And then when it changed again, I put the hedges back on to kind of balance it. And these ones would go up. And then when it changed, boom. And that's how I was just hedging and holding it. And I've been doing that all weekend on crypto. I'm like, oh man, Bitcoin's falling. I'm better short so on. Just trying to just balance it, And then there's going to be a moment where there's going to be rallies. That's something I should do a video on. Okay. I know I've gone through a lot, and it's because I like you guys, and I'm just trying to help you guys out. But what's cool is, and I should do a video on this, but in the history of all the crashes, there's all these runs, these mini bull runs that happen. In fact, there was one time, I'll go do the research. There was one time that was 15 weeks. 15 weeks that it went on a bull run during a big bear run. 15 weeks. And then there's been a couple that have been 7 or 8 weeks too. But I'm telling you, this is why you have to be a directional trader with a system in a market like this. You have to trust the direction, and you got to just run with that. Run those ribbons. I like doing it on the hourly. I feel like if it can't get bullish to the hourly, I'm not trying to buy it. If it can't get above the 200, I'm not trying to buy it. And if it's failing right here below the 200 and it has all the things, red ribbon, it's made a lower high, I mean, yeah, just go short. Obviously, look at the trend. You would have made money even if you sold right here from right here. That's 36,000 to 34,600. That's $1,500 a share. I mean, it's pretty simple. I mean, yeah, you could do better. You could do like I do and sell right here when you get the reverse 9 cross on the hourly, but you can do it. You just have to. You can't overtrade. You got to be heavy on your trades, your position size. I know a lot of things I'm telling you are a little different than I teach you, but as times change, you have to you got to do things a little differently. I am a big proponent of using a stop loss, but right now, look at this. If you were doing the blue ribbon, I mean, they came and stopped you multiple times. But if you just left it off and you were oh, I'm just going to run this up, and then what you do is when everything's coming down on all of them, you can see it's going to come down, so you can just use that one to get out at the cloud. But or when it crosses below the 200, which is right now. But even from here to here is still, it's still a gain, guys. So, I mean, maybe you could have made more from here to here or here to here, but this is still not bad when it comes to investing. You're still going with a trend, and let those ribbons be your guide, but have your conditions for safety purposes too. So I think that's it. I think that's all I'm going to talk about. Just know that, when all this stuff happens, there will be more unemployment. Right now, they're saying we're at maximum employment. I'm going to tell you straight up, that is total bullshit. We have 16 million jobs that need to be filled still. So when Jay Powell's like, we got maximum employment, lies. We got plenty of food, lies. Inflation's at 7.5, lies. Like, I'm giving it to you real, guys, okay? I'm telling you, like, where we're at. But I can't prove that we're higher than 7.5, and people don't want to talk about that because, they don't want to go against the government or anything, but we're probably triple. And you can just ask yourself, have your prices increased across the board for your living expenses monthly 7.5%? I think you know the answer is no. They're higher, right? Everybody's is higher. Everybody I know is higher. So, yeah, I wouldn't believe that. And, consider maybe gold, long, energy long, doing it, like I said, with the ribbons on maybe a mid-time frame. Look for conditions for safety. Be aware of maybe some belt tightening's not a bad idea. This rate hike thing's coming. I think that no matter what they do, they're damned if they do, they're damned if they don't. Like, they raise rates, they're damned, and so are we. Like, they raise them faster, they're still damned, and so are we. They have to raise rates over the 7.5% very fast in order to, like, hamper down inflation. And they're not going to do that because it's going to not only crash the stock market, and it's going to crash the stock market bad, but it's going to without a doubt put us in a recession. And the stagflation thing, they're like, oh, we're not having stagflation because we have jobs at maximum employment. Guys, we don't have maximum employment. That's a lie. That is bullshit. Like, we have 16 million job openings. Go look around. Do you get perfect service? Do they have enough staff anywhere you go or where you work? I think you know the answer. It's no. Why do you think they're coming out on the news being like, we're willing to pay more if we can even get employees? People don't want to work because it's becoming so expensive to live in certain areas. They don't want to drive. They either need to live near their work or they can't commute because gas is so high. It's becoming like this whole, like, it's becoming bad. So you just definitely want to have your cash. You want to just pick your spots. I think energy, gold is two of them. There's obviously other ones. There will be deals. You will get your Teslas. You will get all your stuff like super cheap. You will get that. There will be a point. But I mean, even like your SoFis and Palantirs are almost near like IPO pricing right now. And yet they can still come down. There's a lot of positive stuff I want to look at for like investing, but like I don't think that we're just at the bottom. I was very positive until we started getting the rejections off the primaries. Once we got the rejection off the primary, like, it really changed my tone here. This rejection right here, you look at any chart, when you see a rejection off a primary, it tends to do that number. So be careful. Don't run out of money dollar cost averaging. Don't run out of money, period. And here's the thing, like, I don't know if you guys like realize this. I don't know why people don't talk about it, but if you dollar cost average and you average down and you buy 100 shares of Microsoft here and 100 shares of Microsoft here and 100 shares of Microsoft here and 100 here, okay, you're still, even though that's your average cost, like, if you were to go sell all those when you got to an average and 3 of them were higher at a loss, like higher price than that at a loss, and a couple were lower, which got you to even when you sold, you still have a wash because you have if you go rebuy it and you had it at a loss. So unless you're going to be holding for a long time, that has problems, to get in and out of. So make sure you have money so that you don't need the money. And these lower highs are important in this primary trend. You got massive geopolitical problems coming in. You have major inflationary problems happening. You have economic, there's slowing going on. I mean, I know our GDP is a little higher right now, but that's all going to change, guys. The whole narrative is going to change. Trust me on this. Like, what happens is what's happening to Peloton. The values come down in the stock market. They can't start selling their product because people aren't going to buy a Peloton. They're going to buy bread. Okay. And, the last thing to go is going to be the food, and the food is already starting. So what's going to happen is the Microsofts are going to buy the Activisions. Then companies are going to get laid off. Companies that have no earnings are going to get decimated and swallowed up. And jobs are going to be lost, and the unemployment rate's going to go up by the time we're already in a recession, but the Dow is already telling us we're going. And historically, everything that you see the Fed doing is what the Fed did before we had an impending recession. So it's a shit scenario, and I'm sorry to tell you, but there's ways to deal with it. There's ways to make money and protect yourself. Like me, I never want to pull money out of my house, but put a chunk over there and just auto pay, whatever. Let that go for 4 or 5 years. Not even think about it. It sucks. You're bleeding cash, but you can save your home. Or you can probably be what's more logical and smart and non-emotional and sell at the top. And I'm still young enough. I can make a couple big moves every decade and a half in these economic cycles, and really be sitting nice, and maybe have a kid or two, and then hook them up later when I'm older. I'm already getting old. But yeah, I mean, I don't know. I'm still trying to figure that out. I really don't want to sell my house. But I know this house could easily lose 1.2 million in equity like that. This is not like a regular house. This is like straight cribs. And a house like this is, you have to have a very wealthy person to buy a home like this. They have to be like a brain surgeon, or a famous musician, or like somebody that has like a lot of money, for a house like this. It's not like your regular buyer, so they don't sell as fast. And on a house like this, when you do a sale, it could cost me 200 grand just in seller closing costs, or whatever the number is. Maybe it's more. I don't know. I haven't really looked into that. I'm scared to look. But even a refi, the cost is it's damn, dude, it's a chunk of change on a refi. But you know what? That's just the cost of doing business. Every time you do a transaction on your house, that's going to happen. I really don't want to do this. I don't want to do anything with my house. I don't want to sell it. I don't want to refi it. I don't want to pull cash out. I don't want to do any of it. But I just think that the market is going to go down. And I just think that the economy is going to get really bad. And if you got a chunk of cash, you can actually do things. I can start businesses. I can give people jobs. I can do what I did, before. And, I just don't want to get caught up and lose like I did last time in that last recession. It really, really hurt me. It took me a long time to get back. Well, I went through a lot of struggle from, losing that $10 million to all the things I had to do to become successful again. It was not easy, and I don't want to have to go through that again as I'm getting older. So just word to the wise, have all your ducks in a row, think way out, be careful, don't overdo it in the stock market right now. I don't think that we're coming to a bottom, even though we got these nice little higher lows happening. The rejections and the primary trend is something to worry about. And there's always too many catalysts to let this thing rally. I mean, if they're going to raise rates throughout the entire year, the entire year is going to be the consensus is always going to be moving and shifting and changing to discounting future values and whatnot. So yeah, I know I've talked and rambled a lot. If you have any questions, throw them in the chat, the comment section, and come on in the Discord and chat with me and everybody else. They're real cool in there, and I hope you guys are doing well, having a good weekend. Enjoy Super Bowl Sunday, and welcome to the Wheelhouse.